Ladies and gentlemen, thank you for standing by and welcome to the First Quantum Minerals Q4 Results Conference Call. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question-and-answer session. To ask a question during the session, you will need to press star 1 on your telephone keypad. Please be advised that today's conference is being recorded. If you require any further assistance, please press star 0. I would now like to hand the conference over to your speaker today, Mr. Clive Newell, President and Director of First Quantum Minerals. Thank you. Please go ahead.
Thank you, Operator, and thank you everyone for joining us on what I believe is an extremely cold day in Toronto. Joining me on the call today are Philip Pascall, Chairman and CEO, Hannes Meyer, CFO, Tristan Pascall, General Manager at Cobre Panama, Juliet Wall, General Manager Finance, and Simon McLean, Group Reporting Controller. As usual, before we proceed, I will draw your attention to the fact that over the course of this conference call, we'll be making several forward-looking statements, and as such, I encourage you to read the cautionary note that accompanies our fourth quarter and full year MD&A and the related results news release, as well as the risk factors particular to our company, which are detailed in our most recent annual information form and available on our website, first-quantum.com, and on SEDAR. A reminder that the presentation which accompanies this conference call is available on our website. So I'll get us started with some opening remarks before Hannes' review of the financial results, and then we'll open the lines to questions. So 2019 was a transformative year for the company as we brought Cobre Panama into commercial production. This allowed us to deliver yet another record quarter of copper production and a new company record for annual production. Also, our costs remained low during the quarter and for the year, well within our guidance range. In particular, costs at Cobre Panama continue to be better than we might have expected from such a new operation, but we believe that there is still room for improvement as the ramp-up continues. As a result, the first full quarter of production from Cobre Panama also contributed strongly to quarterly cash flow reflected in our results. Before moving on to the full financial review, I think it's important to address current events. I'm sure you're all aware of the continuing evolution of the coronavirus, now termed COVID-19, epidemic, and its actual and potential impact on our industry. The last time I spoke to you, a little more than 3 months ago, nobody had heard of this disease. Despite its seriousness, this epidemic, which particularly in China is already impacting on copper usage, supply chains, sales, and ultimately the copper price, some of our actions earlier this year have helped to mitigate its potential impact. Our hedging program, now extended through 2020, provides some protection from copper price volatility. Our opportunist bond tap issue back in January 2020 has strengthened our balance sheet and made us more resilient to black swan events such as this. However, although our physical sales have not been materially affected, and experts believe it is likely to be a short-term event, we are monitoring the situation very closely. So to wrap up my comments, our performance in 2020 and the start of commercial operations at Cobre Panama has accelerated several of our strategic objectives. Our vision to be a leading copper company has been greatly advanced. Our geographic diversification has been better realized, and we have increased our cash flow generation capacity, which in turn will help us to begin to delever our balance sheet before considering any new growth projects. So with that, I'll hand over to Hannes to go through the financial review.
Thanks, Clive, and good day to everyone. I would like to direct you to the slide titled Overview in our presentation. 2019 was indeed a transformative year for First Quantum, marked by the successful delivery of Cobre Panama to the market and into commercial production ahead of our schedule. This achievement greatly enhances our vision of being a leading copper-focused metals and mining company. From a finance perspective, we are now well positioned to focus firmly on deleveraging the balance sheet, since our capital commitments in 2020 is expected to be well below each of the prior 7 years. As you have seen with the refinancing we completed last month, consistent with this objective, we are continuing to prudently manage our capital structure and assess our liquidity and financing sources. In the past several years, there have been many uncertainties that have caused fluctuations in commodity prices. As such, we've utilized the hedge program to manage our commodity risk and cash flow stability. In light of continuing uncertainties, which now includes the economic disruption and unknown implications of the new coronavirus, we are continuing our program. Today, we have hedged approximately a third of our expected copper sales in the first half of 2020. The next slide on delivering on growth. During the year, we had record copper production with 702,000 tons of copper and 257,000 ounces of gold. We have diversified our geographical presence with over a third of 2020 copper and gold production guidance coming from Panama, following a successful initial ramp-up period in 2019. For the full year, which for the most part consisted of its ramp-up, it contributed approximately 147,000 tons of copper. Cobre Panama will indeed be a world-class operation. Turning to the next slide on production. Copper production was within guidance and continues our upward year-on-year record-breaking trend, with copper production increasing 64% since 2015. Gold production of 78,000 ounces was 62% higher than the same period in the prior year, with annual production of 257,000 ounces being 39% higher than 2018, reflecting Cobre Panama's contribution of 60,000 ounces and higher gold production at Kansanshi following operational enhancements. Turning to the next slide, a financial overview. Comparative EBITDA of $511 million for the quarter is 6% increase on the comparable quarter of 2018 and benefited from the contribution of $136 million from Cobre Panama. The results were impacted by a 7-cent lower net realized copper price, mitigated by a $26 million hedge gain in the quarter from the copper hedge program. Comparative earnings of 5 cents per share includes 27 cents per share of interest expense. This is new since interest is no longer being capitalized following the declaration of commercial production at Cobre Panama. Turning to the next slide on EBITDA. Underlying comparative EBITDA, after allowing for the movement in metal prices and foreign exchange on operational costs, was 10% higher in the fourth quarter on the back of stronger Cobre Panama contribution. Whilst the EBITDA is lower than the previous year, the full 2019 underlying EBITDA was $71 million higher than the comparative period in 2018, when removing the impact of lower realized metal prices and favorable foreign exchange on operational costs in 2019. The improved underlying EBITDA was due to hedge gains from the managed hedge program combined with strong Cobre Panama contribution. These were somewhat offset by the impact of the Las Cruces land slippage. Turning to the next slide of quarterly unit cost. Copper C1 cost of $1.24 was broadly in line with the same quarter in the prior year, despite lower production at Sentinel. These costs include the impact of Cobre Panama's first full quarter of commercial production, with a copper C1 cost of $1.28 per pound. Overall full-year copper C1 of $1.31 per pound and all-in sustaining cost of $1.78 per pound were comfortably within the full-year guidance. All-in sustaining cost of $1.73 per pound for the quarter increased 5 cents against the same period in the previous year. The increase reflects the impact of Cobre Panama's higher deferred stripping activity. Turning to copper hedging program outlook. As I mentioned at the start, we utilize the hedge program to ensure stability of cash flows while maintaining compliance with financial covenants amid the fluctuations in commodity prices. As of today, the company has 172,000 tons of zero-cost collars with maturities to January 21 at a weighted average price of $2.66 per pound to $2.92 per pound, and 62,000 tons of unmargined copper forward sale contracts at an average price of $2.81 per pound. And that runs through to periods of maturity or January 21. Approximately a third of expected copper sales in the first half of 2020 are hedged to unmargined forward and zero-cost collar sales contracts at an average floor price of $2.71 per pound. The company also has an unmargined nickel forward sales contract of just over 12,000 tons at an average price of $6.77 per pound of nickel, with maturities through to February 21. Turning to the next slide on debt and liquidity profile at the year end. The company ended the quarter with $523 million of net unrestricted cash and cash equivalents, in addition to the $250 million of committed undrawn facilities, and is compliant with all financial covenants. Taking into account forecast operating cash inflows, capital expenditure outflows, and available committed facilities, the company expects to have sufficient liquidity through the next 12 months to carry out its operating and capital expenditure plans and remain in full compliance with financial covenants. And as I said earlier, we continue to take action to manage operational and price risk and further strengthen the balance sheet. On January the 9th, the company launched a tap of an additional $750 million of bonds by tapping the existing 23 and 25 notes. The company intends to use the proceeds from the sale of the notes to redeem in full the outstanding $300 million 21 notes tomorrow, and we have repaid $450 million of the revolving credit facility. The second graph depicts the pro forma debt profile post the issue, illustrating the improved maturity profile. Just a comment on VAT in Zambia. The total VAT receivable value accrued by the company's Zambian operations at the date of the claim was $847 million. The carrying value at the end of the quarter was $398 million, reflecting the devaluation of the Zambia kwacha, and that accounted for $242 million, and the application of a discount for the time value of the total receivable to expected repayment of just over $200 million. All Zambia VAT balances are now categorized as non-current. A finance charge of $182 million was recognized in the year, representing the discounting over the expected time frame to repayment. We remain in regular discussions with the relevant government authorities and continue to consider that the outstanding claims are recoverable. Moving to the next slide on capital expenditure. Cobre Panama capital expenditure for the year was $697 million for the 85 million ton per annum development project. Project construction and commissioning is now essentially complete. Other project capital expenditure in 2019 included the tailings dam management facility, construction costs at Cobre Panama, capital expenditure to allow the operation to reach 100 million tons per annum, as well as the development of the Kalina pit. There's also project capital expenditure for relining of one of the high-pressure leach autoclaves and the development of the ISA convert at Kansanshi, as well as trolley assist program at Sentinel and remediation work at Las Cruces following the January land slippage. Thank you, and with that I'll hand back over to Clive.
Thank you, Hannes. So operator, could you now hand us over for questions, please?
Certainly. As a reminder, to ask a question, you will need to press *1 on your telephone. To withdraw your question, press the pound or hash key. Please stand by while we compile the Q&A roster. Your first question comes from Ioannis Masvoulas with Morgan Stanley. Your line is open.
Yes, hello. A couple of questions on my side. First, in terms of the power situation in Zambia, can you provide an update in terms of power availability in the short term, and what sort of risk you're seeing as we go into Q2, especially as the Mopani smelter is supposed to be restarting? And also related to power, So the purchase agreement with ZESCO is supposed to be renewed this year. Do you envisage any changes to the terms, especially if we switch to a cost of service model instead of a fixed power tariff? And I'll leave it there. Thank you.
Hannes, do you want to deal with that? Or
I'll answer it.
okay.
Jens, hi.
Hello.
The most difficult time for ZESCO will possibly have been while the Kariba dam has been very low. And as from about the end of January, we see that its decline has stopped, and then the dam starts to fill, which is what you expect after the rainy season, or during the rainy season, and that's, at the moment, it seems reasonably normal. During all of that time, the supply to our two operations has been uninterrupted, and there's no reason for us not to expect that to continue. And that's about, I guess, what we can say.
Okay. And maybe the second point on the power tariffs, anything you could mention here at all?
Well, again, our power price, as far as we know, was slightly. The arrangements that exist differ slightly from one mining operation to another, and most of them were governed by an arrangement in which CEC as a supplier received power from ZESCO and made certain charges. We weren't party to that, and when the power price needed to be changed, KMP Consortium Mining took an arbitration case, and since then that the outcome of that has been honoured by ZESCO. So we don't expect there's any reason for that to change. Our prices, by and large, are higher than most of the others.
I see. That's very helpful. And maybe just a quick follow-up on the fiscal changes in Zambia. You've provided explicit guidance on costs, 4 cents impact for 2020. It looks like it's a preliminary figure. Do you expect any material changes to that estimate, or do you have a good visibility at this stage of the overall changes and the associated impact?
I think we do have
I heard all that, Hannes.
Look, we have incorporated those fiscal changes in our plans and in our guidance already, so we don't expect a major variation from that.
That's great. Thank you very much.
Your next question comes from Jackie Prozablowski with BMO Capital Markets. Your line is open.
Hi, thanks very much. I just wanted to ask you about the Kansanshi mine and the expansion that you're considering doing there, and if you could give us an update on what the scope of that expansion might be, and timing, if you had any ballpark idea of when that would be, and finally, I guess how you'd be looking to finance that if a asset sale in Zambia is still on the table. Thanks.
Philip, do you want to do that?
Yeah, because we have a strong incentive and desire to improve the balance sheet, we actually would seek to avoid any capital expenditure for as long as we can. That now, as far as we can, our latest evaluation goes, is that we would not need to have any expansion operating before the end of 2024. That's 5 years out. And we would make no commitment to it, or other than some very minor items, for another 3 years at least. And during this time, of course, we are looking carefully at the detail of what we actually have to do. And in the course of this quarter, or by the end of this quarter, we expect to publish a technical report with some information on how that's modelled, and specifically with a capital cost that doesn't require full expansion of the smelter, which we envisaged originally.
Okay, thanks very much, Phil. That's really helpful.
Yeah.
Your next question comes from Ian Rosso with Barclays. Your line is open.
Thanks. Hi, guys. Just to follow up on Yanis's question about the sort of changes in the fiscal terms. Do you expect, or if you don't get any of the VAT sort of receivables during the year, what do you expect the sort of outflows in terms of cash flows would be for the whole of Zambia? And then secondly, just to ask about the Ravensthorpe restart, just if you can give us some details on the expected cost for that. Thank you.
Hannes, do you want to do the VAT one first?
Yeah, sure. I'll do the VAT. I think with the changes in the most recent VAT changes, I mean that limits anyway some of our VAT claims. So I think if on the assumption that we don't get any VAT back in the year, which I think we will get some back in this year, but if we don't get any back, the outflow is probably in the order of about $10 million per month, so you're looking at about $120 million for the year.
Okay. All right, so that's similar to what it was historically.
No, historically we got more. VAT was probably about $15 million per month in total. So
okay.
We were looking at 180, but with some of the changes, we can't claim that back any longer.
Okay, thanks.
Your next question comes from Oscar Cabrera with CIBC. Your line is open.
Thank you, operator, and good morning, afternoon, or evening, everyone. I was just wondering if you can help us out. You've tried in the past with capital expenditure, your capital expenditure forecast for 2021-22, specifically to Cobre Panama. And in your release, you mentioned that the final decision to proceed with capital deployment to get the project to 100 million tons per annum will be taking later on. So can you just put figures around that and the timing of it? If you go ahead with it, when do you need to spend it, and what would you be expended it on?
Tristan, do you want to do that?
Yeah, sure. Thanks for the question. The 43-101 provided an outline of the capital expenditure and the timetable to get to 100 million. And in that document, we were saying that the 100 million case would come on board in 2023. What we're saying is there's no change to that plan. We have the ability to flex a little bit between Batika Pit and Kalina Pit. But there's no change from the 43-101 in terms of timing and when we would expect to come on at this stage. What we're saying is we don't need to deploy that capital this year, and we won't, certainly in the first half of this year, and we'll be pushing out a decision as much as we can, but still meeting the timetable.
In other words, sticking to whatever the technical report says with a view to start in 2023. When would you take this decision?
This year, later this year.
Later this year. Okay, thank you. And then with respect to Ravensthorpe, and is there any additional capex that you require in 2020, in 21? This is a mention of a new deposit being mined.
Yes. Included in our projected capital is an expenditure for the conveyor that goes to Shimaka-Levy. And Shimaka-Levy is the large, long-term deposit that we'd like to have operating in 2021. So expenditure for that will occur through the end of this year.
Okay. Thank you. And then lastly, if I may, in previous calls, you have mentioned, your expectation for cash costs, C1 cash costs in Cobre Panama for 2021. I was wondering if you were willing to provide any, guidance for this year, or how should we think about the progression of this cash costs? I mean, you have done fairly well over during the first quarter of commercial production.
Tristan?
Hans, you got that?
Yeah, the guidance that we previously provided looks very conservative, and we think that we will be able to achieve that. What we are saying is that we're continuing to ramp up, but we do see a lot of opportunity on cash costs. So everywhere I look in the business, from the ports and the power plants through to the mine and the process plant, we do see opportunities to optimize. Really, 2019 was about fundamentals and making sure that we could run and making sure that we could run well. 2020, we can start to optimize in each of the areas, particularly on the cost side of things. So we're comfortable with the costs where they are and progression as they reduce.
Okay, so I think if I remember correctly, you had mentioned like under $1.20, you did $1.28 this the first quarter. So 20% less, you think is achievable in 2020?
Yeah, I think we're sticking with the guidance we've provided at the moment, but yeah, we see opportunity.
Okay. Thanks very much.
Your next question comes from Lawson Winder with Bank of America. Your line is open.
Hello, and thanks for taking the question. Just you made the comment in the release that debt repayment will be a big focus in 2020. I'm just curious, in that light, is asset monetization a component of that? Of course, in addition to the substantial expected free cash flow. Thanks.
That slide, I'll take that. Yes, what we said before is we would continue to consider some areas, which is including Ravensthorpe in particular, but others in addition, where we would seek a strategic partner in part of that business, the benefit of which would be to obviously improve the balance sheet, but also from the point of view that in the longer term other projects might benefit for having relationships of that sort. So yeah, we'll continue to consider them.
And then just to maybe dig down on that a little bit more, would a minority interest in the Zambian assets still be a possibility, and are there any conversations going on in that respect?
Yeah, I mean, the difficulty there has only been in terms of any meetings that the arrangements that had been talked about really just went haywire with coronavirus. So the actual face-to-face conversations haven't been able to take place or even be arranged, and but we haven't had any great expectation that would be advanced very much until after the first half in any event.
Okay, thank you for that. And then just one other sort of point on the asset monetization. Would you consider sort of like a longer-term offtake agreement at Cobre Panama as part of a potential monetization?
Well, I mean, there's a strategic benefit of some longer-term offtake agreements that could easily form part of whatever other arrangement we might negotiate because of its desirability. And that's really the area that we'll pursue it rather than a streaming sale or some equivalent of that sort.
Okay, thanks. It's very helpful. And then just, one question on Cobre Panama. I mean, you're already hitting pretty impressive throughput rates. maybe this one's best for Tristan. Do you really need to spend more CapEx to get to 100 million tons per year?
Look, we have a bit to do in terms of making those consistent and reliable, and that's where we say we're still ramping up. Really, the capital expenditure for the 100 million is to give us, it's in three areas. The mine is the principal one of those, and that is we just need to balance the rate of vertical advancement in Batika with the volume that needs to come out of the pit. And so for that, we look to go to Kalina, and that's what we're evaluating at the moment, and that's largely what the decision's around. To go to Kalina, you need to extend the conveyors and possibly invest in more mining fleet that side. That's part of the evaluation that will happen this year. But you can do it from Batika. It's just that your rate of advancement, vertical advancement, may get excessive. So that's really what we're balancing up. In the process plant, a large portion of the work is done, but we will have some minor areas on transfer pumps and smaller items of that nature. We might need to do some work at the port in terms of just the ability to handle concentrate and dispatch to our customers. And then we'd like to see the tailings dam come on and perform well as in this startup period. It's already underway. We'd like to get the runs on the board at the tailings dam. So those are the considerations, and the capital is really around the mine and those areas that I'm speaking about there.
And Tristan, just one more question while I have you. The sort of cost per ton mining costs that you achieved in Q4 at Cobre Panama, are those sustainable going into 2020 and onward?
Certainly on the mining side, there's no difference. So I've made the point before, there isn't really much place for us to hide at Cobre Panama. We can't run the numbers. It really depends on volume through the door. If we achieve the volume through the door, then we get those cost results. There isn't any tricks that we pulled to get these costs for Q4. So certainly we do see opportunity to improve further. So the first trolley assist line came on stream in December, and we're now running trucks under trolley. We will be putting more trolley into Batika pit. There are opportunities for us to improve from where we are.
Thank you very much.
Your next question comes from Carl Blunden with Goldman Sachs. Your line is open.
Hi, thanks, guys. Just on the jurisdictional side, noticed that the language didn't change about the Law 9 process and potential resolution in your statements. Has there been any kind of qualitative update in the last couple of months?
Will you do that one?
Yeah, I can do that.
Sure.
Or Tristan.
Tristan, then.
Okay. So Law 9, the discussion's continuing. So really the progress has been in meetings, and the number of meetings we've had over with the new government at this time, and so those are obviously discussions behind closed doors, and we're going through that process. So it's very constructive, but we don't have a timetable around it.
Okay, that's helpful. And I know earlier in the call you guys discussed the water levels a little in Zambia. I'm just interested. It does sound like the risk is now receding as the water levels stabilize and rise, but where are the levels now versus in 2015-16 when the power supply was curtailed? Is it materially different?
There's actually a website that you can look at that shows the dam level, and I don't have it at my fingertips. They ran the dam very low by the end of the rainy season of 2019 because they were doing work below the wall, and then of course had a particularly dry season, so it was pretty poor. It will take certainly more than a year to recover, assuming reasonable rains, and then of course that's not predictable. But you actually can go on the web and see that, and you'll see that it got to a pretty low level, and the recovery will take some time. But it's not actually lower.
Philip, the website is Zambezi River Authority, and you can see the lake levels and rises there over the seasons as well.
And the river flows have been particularly strong this year, which is always a good sign. The river flows in the Zambezi.
Thanks, all. I really appreciate it.
Your next question comes from Orest Wowkoda with Scotiabank. Your line is open.
Hi, good morning. Just more on Cobre Panama. Obviously, the ramp-up's going really well. How quickly do you think the operation can achieve the 85 million ton case now that the last mill's installed?
Interesting. Please.
Yeah, hi, Orest. It's really around consistency. So we've been able to do the kind of daily volume numbers that we need to get to that level. What we need to do is be able to do that on a weekly basis and on a monthly basis, and that's really around consistency. That's part of the ramp-up curve, but it's on things like engineering and also training and the capability of personnel. And so it's not really in the assets so much anymore. The assets will deliver. It's really that we can consistently deliver that in terms of having supply chain working well, which is going well so far. But it's all of the aligned systems around keeping that happening every day, every week, every month.
So is that, do you think that'll take a couple of quarters to get to that sustainable rate?
We'd like to do it as soon as possible, and it's really, that's the ramp-up curve. So, yeah, we would hope to have that by the second half of the year, but obviously with a target internally to do it as soon as we can.
Okay. And Tristan, can you remind us how much capital is actually left to spend to get to that 100 million ton case?
I think we've given a number publicly, and I'm just looking at Juliette. But it
over the next 3 years, it's about 240 million.
Yeah, I think that's the number in the 43-101, and that was principally on the mine fleet and on the conveyors, the crushers. I don't think that includes the pre-strip at Colina, which was a little bit on top of that. If we do decide to go to Colina and open Colina up, there's a pre-strip at that new pit.
Okay. But given that capital is relatively minor in the context of your free cash flow now and what you spent for phase one, why wait till 2023? I mean, that's not a lot of capital.
Can I answer that?
Yeah.
What Tristan is really saying is that during this year, we always expected that we would push the plant and it will identify the kinds of things we need to do. And included in that is obviously some more detail on the mine planning. And to give an idea on Colina, we have been doing the sterilization drilling for that conveyor route. Some of the holes that turned out weren't actually sterilization. There was copper there. And, that means you've got to obviously change the plan on which route you take. And these are the kinds of exercises that need to be done. So it's a combination of exactly what we would do and the extent to which we need to do it. If we would go rush out and wanted to spend the money now, we wouldn't actually be quite certain as to what we'd have to do in particular. We could do a whole lot of things, but that's the evaluation process. Does that make sense?
Okay. Okay, no, thank you for that. Is there a chance that you could get to above the 85 million ton case just based on what you have installed right now?
Yeah, it's possible.
Or the 85 is just a number. Sorry, go ahead, Phil.
I think your question is, do you need to spend any capital to get over 85? We don't know, but it's quite possible. It will be very minor.
Perfect. Thank you.
Your next question comes from Matthew Fields with Bank of America. Your line is open.
Hey, everyone. So you've always kind of talked about deleveraging by $2 billion, but the debt has sort of been a moving target. So now that we're at, $8.3 billion total debt, is this a high water mark from which to measure the deleveraging, i.e. is sort of a low sixes total debt, the right, way to think about your full capital structure?
Matt, sorry, it was a little bit disturbed, but I think I got most of the question then. I think Q4 is probably our peak debt level, so we should see deleveraging and a reduction of absolute amount of debt from now on going forward.
Okay, so
you broke up there, Matt, really badly. Yeah, you broke up very badly.
Your next question comes from the line of Gordon Lawson with Paradigm Capital. Your line is open.
Hi, thanks. Just one question left for me. I get that moly's not a large component of earnings, but there were concerns of a penalty at the Cobre Panama. So could you provide any more information related to the moly plant with respect to timing and production estimates?
Yeah, I'll answer that one, Clive. Sure. Gordon, the moly plant, it's really there as just to protect in the event that we do pass through high moly zones in the pit. The moly presents in the ore body is not correlated to the copper, and so it comes in zones, and we haven't seen any zones that knock us off balance so far. So our moly content and feedback from customers in terms of the supply to smelters has been very, very positive, even to the Japanese smelters who appear to be the most sensitive on moly. So we haven't had any feedback or on our moly content in the shipments so far that have gone out of Cobre Panama. So really, the impetus is just to guard against when we might see zones of moly, and so we are proceeding with the project. It will happen over the course of this year, but there isn't any great imperative to fast track that or anything of that nature. So it's happening in an orderly manner so that we can de-man and pull back on the scale of project development at Cobre Panama, and that's why we're saying things are essentially finished, is because we are de-manning and pulling right back to minimal levels. If we just continue with high manning, then it burns cash, and that's really the intent. So the moly plant will be done over the course of the year.
Okay, thank you very much.
Your next question comes from Brian Lally with Barclays. Your line is open.
Hey guys, maybe if I could start, and I'll follow up a little bit on maybe Matt's questions from before, but just on the balance sheet, I think first, to his question, what's the right way to think about what the right gross debt balance is, and then specifically in light of the 2020 amortization, do you maybe mind walking us through your near-term thoughts on issuance versus pay down, what you might do with the term loan, and then I have a follow-up after that. Thanks.
Hi, Brian. Look, I think we have the gross debt level now, so we should see a reduction from now going forward. In terms of term loans, or debt amortization, that is happening now, so in our bank facilities. We continuously look at various, we are actively managing the balance sheet, so it's in our plan to repay that. So that's probably what I can say. And your follow-up question?
Yeah, and thanks for that. I appreciate it. And then, my follow-up, just, outside of CapEx and the 850 guidance, is it possible, honestly, maybe walk through just some of the other notable 2020 cash flow items, just so we can, sort of level set our models for whatever's below, EBITDA, as you think about where free cash flow is going to shake out this year?
Julia, do you want to just give them interest you've probably got?
Yeah, so we've given guidance on interest. The other one would really be tax payments. So tax payments of probably around 300 million.
So probably about 300 of tax. There's still another, what's the Alice Nico payments, about another 100 or so end of the year.
Yeah.
So those are probably the major items in that.
Got it. Okay, so it's CapEx, it's obviously interest, taxes, and then the 95 or 100 Alice Nico payment, and then obviously whatever happens with debt amortization and the balance sheet. Those are the main things to make sure we have right in our models. Is that a fair summary?
Tax over 300.
Yeah, that's
yeah. Okay. All right, great. Thanks. Appreciate it.
Your next question comes from Thomas McNamara with Impala. Your line is open.
Thanks so much. Tristan, could you just talk about as much as you can grade and recovery so far with what you're seeing? And then secondly, Philip, is there a cobalt aspect to Ravensthorpe? Thank you.
Yeah, thanks for the question. Grade has been where we expected to be. We did see a little bit of lower grades in January, but we had talked about grades around 0.4, 0.42, 0.43, and we've seen that in the latter week of January and in February as well. So we're back to those numbers. That's a little bit higher than the sort of life of mine ore reserve or resource grades at Cobre Panama, but that was acknowledged early on in Batika. We do see those higher grades. That's why we start at Batika. So there isn't any change from the plan in terms of grade. We're getting what we thought we would see. And then on the recovery side, I guess that's one of the most pleasing aspects of the startup at Cobre Panama has been the recovery performance. We had expected some variability early on, and we expected recoveries at sort of around 80% or below. In fact, we've actually seen recoveries well north of that, and we've seen weeks where we've gone over 90% for the whole week in the startup at Cobre Panama. So we're very, very encouraged by that. We do have ongoing optimization to be done there, and that's really to look at where we're losing copper, and it's in the normal places, in the fines and also in the coarse material. And so that's some of the optimization that we'll continue to do so that we can improve the recovery. But overall, the story's been very positive at the startup.
And then your question on cobalt. Yes, there's cobalt. I mean, roughly, if we reduce 30,000 tons of copper, you end up with about something over 900 tons of cobalt. I think our first year expectation is well south of that, something close to 23,000 or 24,000. It's just a function of the startup of copper and proportionately less cobalt. If I just comment on Ravensthorpe, it will start and producing mixed hydroxide as it has before. Many of the early customers for that have been in China. The people that we're talking to, and it's a verbal conversation, have said they're confident that the deliveries and the like for that will occur normally. We've yet to see what that means. So there's a possibility in a month or so we'd have some storage of mixed hydroxide, and it's in that mixed hydroxide that our cobalt occurs. But we are also conducting a feasibility study, which is part of the proposal for offering a stake in Ravensthorpe, where some of the people who would be interested in it would like to see us produce a nickel sulfate, and we've done some test work around producing that. And its biggest advantage, and there's a premium, and sometimes it's not a very big premium, but the big advantage of it is that the payable is then a rather higher proportion than our current ones. When we sell mixed hydroxide, our payable is lower because of its downstream processing costs, but also it opens up many more potential offtakes for that product. So it's early
Thank
days.
you.
I mean, we'll get it commissioned and we'll see what what the position is for our clients to take it. Some of them are flying, of course, and some of them in China, and a bit dependent on the logistics there.
Thank you, and good luck with it.
Thanks.
Your next question comes from James Finnerty with Citigroup. Your line is open.
Yeah, hi, good morning. Just a question. I came on the call late. I may have missed this. Was there a comment earlier regarding potential sale of the junior stake in the Zambian assets being stalled? Thank you.
Yes, and we said that we have some ongoing effort in that area. That is not hugely, not progressing at a terrific rate at the moment because of the difficulties of meeting face-to-face, but in any event, we weren't expecting much to happen until after the middle of the year.
Okay, thank you very much for the clarity.
As a reminder, it is star 1 on your telephone keypad if you would like to ask a question. Your next question comes from John Tumazos with John Tumazos Very. Your line is open.
Thank you very much, and thank you for your service to the company. We all know copper is volatile and human behavior is volatile, and whenever the virus passes, the Chinese are going to come out of their house, and maybe it'll be like VE Day at the end of World War II, when they get to consuming again. Would you consider just shutting down your zero-cost collars and taking a profit on them? If you have the situation where at the outset they're very lucrative, or things broke in favor of the hedge. We remember Phelps Dodge having lost a couple billion on zero-cost collars in the 04-08 good copper market.
Our copper hedges, so on these swaps, that's unmargined, so there's no margin calls on that. On the zero-cost collars, I mean, it does give us protection in the longer run. So the hedge book's currently probably somewhere around $100 million or so in the money. I think we have the disclosure in there, Julieta. But look, it's really about managing the risk in the longer run in the company. So we put it in systematically, and we plan then to deliver against that. We'll evaluate the opportunities, but it's really there for the sort of risk mitigation.
John, the whole exercise of hedging is always one that's difficult and very much easier in hindsight. But we are looking at it carefully, particularly actually the other way around, which is the swaps to take out. But in an uncertain world, the timing for that and what's best done with it is something we just have to keep looking at. And as Hannah says, they're all in the money. It's just a matter of some timing as to what we do about it.
Thank you.
Your next question comes from Sanjay Iyer with Coherence Capital. Your line is open.
Hi, thanks for taking my question. Just wanted to clarify. So you are focused on deleveraging and paying down debt, but there was some talks about some expansion as well. So what's the plan for any expansions or build-outs as far as financing that? Would it be with some project-level debt, or would you use equity, or how does that line up with the overall deleveraging goals?
Look, I think the expansion that we talked about is relatively modest and over a few years, so it doesn't require a significant amount of debt, and we can fund that from operational cash flows.
Got it. Understood. And do you have a timeline that you guys are looking to get to that $2 billion of debt reduction?
That's a good question. I mean, it's very highly dependent on the copper price. So, in a stronger copper price environment like we had early in the year, it of course will happen much sooner. At current levels, it will take longer. So, that's why, we've talked about sort of other minority stake sale processes, and so we've got various initiatives on the go to try and reach those targets, whether it's price or otherwise.
Okay, that was going to be my last question. So you are reevaluating the portfolio, and there are other potential asset sales besides Zambia?
Sorry, no, we've got the process on Zambia on the go, yeah.
Yeah, certainly, and we've actually have quite a formal process on Ravensthorpe, as we've announced.
Okay, understood. Thank you.
Your next question comes from Frank Duplac with Prudential. There are no further questions at this time. I will now turn the call back to Clive Newall for concluding remarks.
Thank you very much, operator. And finally, if there are any follow-up questions from anybody, please contact either myself or Lisa. And thank you for your participation on the call today. Goodbye for now.
Ladies and gentlemen, this concludes today's conference call. Thank you for participating. You may now disconnect.